We are coming at you today to talk about the state of affairs in the real estate market. We are seeing sellers coming to the realization that their house is not going to sell overnight, and buyers realizing that while it is an expensive market, they're going to be able to negotiate hard for a deal.
Yeah, really well said. I don't know if it's a seller's market. I don't know if it's a buyer's market. I think it kind of depends on the price point. But what you are seeing is people realizing that the added value is the home. Let's focus on acquiring the home.
It's the Tim and Rene Real Estate Talk Cigar Show.
Hey guys, welcome back to the channel. If you're new here, feel free to hit that subscribe button and sign up for the deal of the day. That way you can get a direct listing shot straight to your inbox and you can start hunting for a home with Rene and I. I'm the realtor and Rene is the mortgage advisor.
El Boricua Prestamista, the lender to help you strategize, not just into the purchase of your home, even the refinance of the debt that you currently owe. Let's talk.
So in today's talk show, we're going to be addressing quite a few topics. We're going to be talking about the state of the market, to some exciting news that's breaking. We're going to talk maybe some implications of what's going to happen. We're also going to smoke these awesome Don Pepin Garcias. These are an original cigar, the founder of my father and
That's right.
Other brands.
Yeah, Cuban related. The Don Pepin Blue, as it is affectionately called, is a Corojo Oscuro wrapper with Nicaraguan binder and filler. It's smooth, it's tasty, definitely. This one is actually hitting a little bit tight, but I'm enjoying it.
And you're definitely going to want to stick around for the feel-good fix. We're going over some news out of Puerto Rico, and we're also going to be going over some news out of this very studio, which is a brand new setup.
Love the Speakeasy Tin, it's looking great.
You'll see some videos of it later on here. So let's get into the current real estate market. We're seeing it all around. I mean, we're obviously having conversations with people on a national scale. I've got some clients trying to sell a home in Scottsdale right now, and their home has been sitting for 180 plus days. We're seeing the seller's market affected by the Airbnb bust. In some areas, rampant new construction without a supply to catch up with. Now we will get into markets where that's not affecting. And then you're also just seeing obviously the lack of affordability. Buyers are not able to afford. They're locked into low interest rates on their home. And with the interest rates pushing above 6% right now, you'll notice a lot of first-time home buyers locked out of the market. But there is one solution that we're seeing as effective, working with a first-time home buyer right now, veterans. And Rene, what's that term called that we just got $19,000 for them?
Yeah, we're talking about seller concessions, and more importantly, the conversation here is how do we maximize seller concessions in this market? Seller concessions are essentially credit. That's money that the seller's willing to offer the buyer to support in a myriad of things. One of them is to help cover the closing costs. So we're talking right now about a VA buyer who's putting zero down, but also getting credit from the seller to cover those closing costs, which means he potentially walk away with this transaction without putting anything down. So when you are in this world, in the mortgage world, you'll hear about buy downs, permanent buy downs, temporary buy downs. This is something that with images and with a scenario will make much more sense. But let's talk a little bit about how to maximize those $19,000 in seller concessions to not just cover the closing costs, but to also create what's called a temporary buy down, which easiest way to describe it is a subsidy using the seller's money. An account is created and monthly, a portion comes out of this account to subsidize the monthly payment. Our client is going to be saving around $500 a month for that first year. A little over $300 a month from that second year. And this is money that's coming from the seller that every month will come out for those first 2 years to help lower the monthly payments for the buyer. Not only are we using those credits to cover the closing costs, but we're also doing the temporary buy down and a permanent buy down, being that for this 30-year note, the interest rate was lowered as a result of investing towards lowering the interest rate. It's all math. It's all break-even point, but more importantly, it's what does the client want? What does the family need? How do we strategize with our realtor to not just get the seller concessions, but to maximize and break through that affordability crisis in the eyes of the buyer? Because once they see the potential of that temporary buy down, once they see that they can use the seller's money to subsidize that monthly payment now is nowhere near as high as it once was because of those savings. That's what's getting buyers to actually say, you know what, let's do it. Let's buy the house.
In Portland market specifically, where we work out of, we are seeing that the new construction is not keeping up with demand quite like it would be in like the Sun Belt, where they overbuilt and they're seeing stacks and stacks of homes now available.
Here's a little bit of cynicism, and I know that I'm usually the positive guy, but the construction companies, these builders, they're releasing these homes intentionally so that they can keep the demand high and the supply low. It's brilliant. I'm not saying anything negative about it, but they do have control over that.
Yeah, I mean, just like the gold reserves, the government's going to keep enough gold to keep the value up. But with these homes, speaking to our specific market, there's two things I kind of want to mention to these concessions is A, that buyers are always going to shop what a mortgage is against the rent. And with these buy downs, I've noticed that it does bring the buyers into this picture where they can say, I can own a home for a comparable price to rent. And when the refi market comes up, I'm going to be able to refinance, like I did a buy down, and then when the refi market hit, refinanced on the house and was able to get the same payment I had on the buy down permanently. These fixed mortgages are a really great asset to have as a homeowner. And then on the back end, you're also seeing in our local market, because of the new construction not quite picking up with demand, you are seeing, like in our veterans scenario, competition. And so you're actually having to compete, but it's not the same competition we saw a few years ago in the hot market. Still get the seller concessions, but outcompete somebody else that might be balking a little bit. So if you're prepared to pull your sleeves up and work with, I think, a dynamic team that's going to be able to fight hard on that and strategize. We also came in during the inspection period and asked for additional closing costs, negotiated for more money with kind of the acknowledgement that we've got some competition in the area that has to keep us focused, but still get our clients the best deal possible.
Yeah, this is just a reminder. The realtor, Tim Jackson, finds the home. The lender, Rene Canler, El Boricua Prestamista, finds the money. So what you want is a team that works with each other to serve you. In this case, we find the money. This is what you can buy. You have to look at that and say, you know what? Let's do it. Or I would like that monthly payment a little bit lower. We start to strategize. That's what it is. And I got to give you your flowers because you understood, because of the price point, because of the neighborhood, that there was going to be a little digging to do. So you asked the questions in order to know how to best craft the offer so that our clients could get the house that they wanted. After they left the house, they called me.
Yeah.
Rene, we want this one. And so that's what you want. You want the excitement.
Yeah.
That's important. But then you want a team that not just understands the excitement, but understands the assignment.
It was an attractive home that had just hit the right price in the right neighborhood, that had attracted 3 offers, and we're still coming out with, like I said, $19,000 in seller concessions. We're not paying above asking price. We're getting these clients, they already saw the value and they said if we can get these concessions on top, it's going to be the icing on the cake. So I mean, as a buyer, you can have your cake and eat it too if you're hunting with the right people who know the market, who are going to be able to tell you all your options on the financing side, and then unlock the local market by boots on the ground, looking at homes and seeing which option is best for me. Obviously, different suburbs, different neighborhoods are going to be different strategy.
Yep.
And
different price point, different strategy. It is knowing the market. It is knowing your options. And obviously, I think is the most important, is once you start working with a dynamic team, is listening, asking questions. Once you get the responses, that's how you cultivate trust. So then you let the team go and serve you.
Yeah. So whether you're looking to sell a home in this market or you're looking into buying and you want to weigh those options, definitely reach down below to us. We've got our contact information in the description. That way you'll be able to have a conversation and say, hey, this is what we're trying to accomplish. You're looking to sell a home in this market. I like to give you all the options available, give you a good value of what it's going to take to sell your home for max dollar in this market. And if you're looking to purchase a home, maybe sell into a purchase, we're seeing a lot of those. We will come come up with the best strategy for you to accomplish your goals. We're licensed in both Oregon and Washington, so we've helped a lot of people cross the...
And even some of you might consider, as already being a homeowner, renting out your home and moving into the next home. That's how you start to build a portfolio, and using not just the equity of future investments, but also using the rent to qualify you into buying more and more property.
We're really in a market, I think Rene said it, we're in a bit of a lukewarm market where the homes that are listed ready to go, dialed in, look beautiful. The 9 out of 10, the 10 out of 10 homes tend to fly off the shelf. Whereas the homes that need a little bit more work tend to get beat up in a market where buyers can be a little bit pickier. It's something to keep in mind whether you're making that purchase decision or you're getting ready to list. And so we just have our thumb on the market, and we'll really be able to help guide you to where you're trying to go. Next, we're gonna break into a little bit of news in the mortgage market. Rene, what's the news that's happening? It's kind of a...
Yeah, there's a lot that's going on in regards to the economy. At the time of this recording, we're seeing Donald Trump put into practice what he wants to see in the economy. And one of the things that he floated was the privatization of Fannie and Freddie. They were created by Congress many years ago to be the regulators. They're the ones that create the checklist of items that people in my position, lenders, have to make sure that we're reaching so that loan qualifies for a Fannie or Freddie loan. That's the money that banks use. They don't use their money. It doesn't matter if it's a bank, a credit union, or a broker like myself. The money is used from Fannie and Freddie as a result of getting that checklist. Fannie and Freddie is government regulated and owned, and the government invests into these entities. And Trump is saying, why don't we privatize them? Fannie and Freddie was privatized for many years, and many people in the industry will say, fortunately, it was not during the COVID years. The government was able to keep the mortgage industry going because they were investing into a corporation, a set of regulators that they owned. And that's why the money was backed up and there was no fear. If it becomes privatized, what is that going to mean for the interest rates? Are the margins going to change? Do privately held companies who are now backing up the conventional loan going to create or need bigger margins? That's the question that people are asking. No matter if Fannie and Freddie remain the same or if it does become privatized, there are still loan options like an FHA loan or a VA loan that will always be competitive because those still will be backed by the government.
So what you're saying is that Freddie and Fannie, if they're sold to a private company, will they be taking the entire FHA product with them and privatizing that?
Who knows what will happen? I'm not a crystal ball reader.
I thought Freddie and Fannie basically ran the FHA loan, don't they?
No, that's conventional. Fannie and Freddie is conventional. FHA would be Ginnie Mae. It's a different entity. So the FHA loan, the VA loan,
so Ginnie's
the
not
USDA loan, the idea is would still be government backed. If Fannie and Freddie become private entities, that would affect the conventional loan.
But the conventional's already a rate higher than the FHA, correct?
Correct, yeah. That's another conversation. What distinguishes a conventional loan from a VA loan or from an FHA loan or from a USDA loan? And there's a couple different pieces there. The FHA loan, because it is government backed, has two things that the conventional loan does not have. One is a funding fee. It is a percentage of the loan size that is not paid when the home is purchased. It is paid when the home either is sold or when that's refinanced. So the funding fee is found in government-backed loans, not in a conventional loan. And the other thing is the permanent mortgage insurance that an FHA loan has that a conventional loan does not have. You will have mortgage insurance on a conventional loan if you're putting less than 20% down. Yes, you could buy a home for less than 20% down. You can buy a home on a conventional loan for as little as 3% down. Anytime someone buys a home with a conventional loan, putting less than 20% down, they will pay mortgage insurance just like an FHA loan. But an FHA loan always has the mortgage insurance the way that it's set now. Where a conventional loan, that mortgage insurance either will not be applied if you put 20 or more, or once you get to having 22% equity, that mortgage insurance falls off the loan.
And if you're like me who used the VA loan both times I purchased a home, I used 0% down the first time and then strategizing with Rene on this current home, we did 5% down down due to the funding fees involved with the VA. We found
lowered the funding fee drastically by putting the 5% down. And a VA loan never has mortgage insurance. So you could put 0% down on a VA loan and not worry about mortgage insurance. That is not one of the options on a VA loan.
So the conventional is already a loan that we're seeing less and less of on our desk. Let's say 2 or 3 years ago, we were seeing a lot of conventional loans come through because the market was just so red hot and interest rates were so low. We're seeing FHA loans being a lot more competitive now. If Freddie and Fannie Mac are sold and conventional loans become even more uncompetitive, wouldn't the FHA just become the choice loan for 90% plus of the market?
I mean, it depends on who you're working with, to be quite honest with you. So in our office, 2020, 2021, 2022, 90+% of the loans were conventional loans. Something happened within the last 2 years, 2022. FHA did one thing that made their product more competitive, and the conventional loans, Fannie and Freddie, did something that made their product less competitive, which has increased FHA loan production, at least in our office. So FHA lowered the cost of their mortgage insurance around 2022. That means clients were paying less towards mortgage insurance. Now on the conventional side, they added what's called loan level price adjustments. They made it a little bit more expensive in certain scenarios. And you couple this market where you have buyers that can negotiate, that can get seller concessions. The FHA loan became even more enticing, not just because of lower mortgage insurance, that was one piece, not just because the conventional product became a little bit pricier because of the loan level loan adjustments, that was another piece, but also because with the FHA loan, you can get 6% in seller concessions, which is twice as much as you can with a conventional loan, especially if you're putting less than 10% down. So a client was able to go with an FHA loan that had lower interest payments, that had lower mortgage insurance payments for the most part, and can get the most out of the seller with seller concessions. And it just became almost strategic to go with an FHA loan, especially in the market that we're seeing in the Portland metro area.
Yeah. And so do you think there's a chance that if Freddie and Fannie go private, they're no longer owned or backed by the government, that FHA rates would also get pushed up with them? Could those stay subsidized while the other diverts?
You know, I really hope not. I understand that competition is important, but the purpose of competition is to keep pricing low so that there's more options for home buyers.
Right.
It doesn't sound like that's what FHA is about. FHA is about providing more opportunities for first-time home buyers. That's the reason why that loan product exists.
Yeah.
That's why FHA decided to lower its mortgage insurance about 2 years ago, now 3 years ago.
Yeah. We'll definitely stay tuned as we explore what the housing market's going to do over this next year. Rene and I are going to be dropping videos and keeping you updated about what the real estate market's doing nationally and locally. And if you are interested in getting in front of the market and seeing homes come to your inbox, or you want to have that discussion with us, just drop us a line down below. We would love to get a hold of you and have that conversation. Let's now get into our feel good fix section of the video, because there can be a lot of doom and gloom in the real estate market. And Rene and I, we like to laugh, we like to smoke cigars, and we love to have fun with all of our clients. We like to make it a light and fun process where you're informed, but you're also like having fun with the process and you feel like on top of the world.
You know, trying to keep it real. I mean,
Yeah.
and then to keep it real, the reality is there are so many more important things in this world than money or property. And I say that genuinely. Relationships are very important, and tomorrow's not promised today. And so, Feel Good Fix, for my gente boricua, los quiero un montón. Me encanta ser de esa isla bella del encanto. And so this is recent album came out from Bad Bunny, and it's a song. Cuando, you know Bad Bunny, you know he is reggaeton. And in this album, it is all about typical Puerto Rican music. But in that message, what he says truly captivated me. He says, I should have taken more photos when I was with you. I should have kissed you more, hugged you more when I had that chance. What a reminder, right? Think about that. That could be your family, your friends, your brothers, your sisters, your children. What a reminder that the important things in life are what surround you. More importantly, the people that surround you. And even though we're here because we want to serve you in your financial goals, especially as it relates to real estate, what's more important is the relationship that we'll cultivate over that time as we get you into that house.
So stay tuned as we are giving you these updates. We've got another piece of feel good. We're doing 2 feel good fixes today because it's just a great day. And we have got a studio that's been built out out. I'm gonna actually pick up the camera and show you around.
Check it out. And Tim, you said it's about 70% done, right?
This is about 70% done. You're gonna see a lot of changes happening over here.
The Jackson Speakeasy.
And you've got these awesome live edge redwood tables going, or bars that have gone in, a workspace, and the windows are gonna get replaced. But you can just see, and the lights are gonna be going in up there. This is gonna be a place where you're gonna see tons of videos coming at you from Portland, Oregon. So 2025 is your year to get into a home. Rene and I are here to help you out. I'm the real estate agent licensed in Oregon and Washington, but I can help and get you a realtor in any of the 50 states.
Licensed in Oregon and Washington, your mortgage advisor, El Boricua Prestamista, Rene Canler at your service.
Awesome. We'll see you guys next week.